Apurva Prasad is with us to make sense of how to approach the stock from these levels. Apurva, good morning. First, what's your base case in terms of the kind of expectations, and of course your thought on the stock now that it's corrected a bit?
Good morning, Anuj. So we expect about 2% constant currency on the revenue side. Margins, we expect slight improvement, about 20 bips. I think broadly this should be among the better performing for the quarter in the tier 1 IT companies. There is very deal momentum that we have seen over the past 3 to 4 quarters now. So I think an important metric to really watch would be the TCV, which they've started reporting in the last 2 quarters. So I think that will be indicative of growth beyond FY19. So I think that should be a very key metric to watch. The other, I think, important aspect is, their large account metrics. It's about 100 million plus accounts, which is about 44 accounts that they currently have. And there's been a good traction within these account base in the last couple of quarters. I think these two things should be key monitorable and be indicative of growth ahead. So we expect a double-digit sort of a growth rate to for TCS going forward.
Why aren't either you or Reema talking about digital? I thought that would also figure in terms of what you're watching out for in the numbers or the conversation.
Absolutely. So digital has been a standout, for TCS. If you compare that with an Accenture, where there has been a lot more inorganic, TCS digital has actually accelerated faster than Accenture's digital, and they have lost a lot lower in the legacy side. So their digital book has gone up about 2.5 times in the last 3 years. It stands about 28% of revenue. So I think that kind of trajectory is likely to continue. In fact, if you see even TCS's profile, the last 2 quarters, their digital has been accelerating. So with the hypothesis that digital can potentially be better margin business, there's a very strong tailwind.
Okay. Apurva, morning. In terms of commentary, what would you expect to hear? Because, Accenture did warn of a volatile macro environment. Do you think TCS would also showcase some caution because of headwinds like trade tensions, Brexit, etc.?
So I think Accenture did not really cite macro warning. What they said was the budget growth for the year can be lower than the previous year. That's just one thing. So yeah, obviously we need to watch out for the budgets and the client have set up for. But I think it'll still be early because the company will probably only talking about it towards the end of the month. But yeah, that becomes critical. Also, the method of selling has changed in a big way. So a lot of it is POC-driven sales. As digital is scaling up. So it's getting delinked a lot more from the typical RFP budgeting, which tends to happen. So I think, again, watching the digital number becomes that much more important.
Apurva, how is the stock position? Because as we've been highlighting, it slipped about 17% from its recent peak. If the numbers come in line with expectations, say a 2% constant currency growth as you were expecting, how should the stock move?
I think this quarter 2% should be fine. I think what the street is probably more trying to figure out is growth beyond that. So I think any forward-looking statements which is indicative of a sustainable double-digit growth, I think that should be very comforting because that seems to be the primary concern.
Okay. Apurva, pleasure speaking with you and with Reema. You all make us feel like experts on TCS. We are quite geared and prepared for the numbers. And of course, we'll touch base with both of you when the numbers come. And for all of you out there, remember you can catch the management briefing the press this evening at 5:15 p.m. Expectation is the results will come an hour earlier before the press briefing.